Greetings, members one and all of the Salivation Nation. Exciting news for those of us who accumulate precious metals. Both gold and silver continue to climb, and silver has now reached a 2-year high, further closing the gap between gold and silver. So I think that's some encouraging news. So let's explore this article here from MarketWatch and see what's going on and why silver is outperforming gold this month. So this is an article, MarketWatch. Gold futures climbed to their highest finish since 2013, and silver rallied to a more than 2-year high on Tuesday, with losses in U.S. stocks and a drop in Treasury yields providing a boost to the precious metals as investors' hopes for progress on the U.S.-China trade talks have faded. It's been a roller coaster ride in terms of the U.S.-China trade talks. And at this point, I would think that we should probably just bet that there's not going to be any movement in the trade talks until after the election. Because, from one day, it's literally changing from one day to the next. And my guess it really should be baked in at this point. But that's not how psychology works, really, is it? It's kind of crazy. Gold for December delivery was up 0.98% on the COMEX, rose $14.60 or 1% to settle at $15,051.80 an ounce. That was the highest finish for most active contracts since April 2013, according to FactSet data. September silver was up 2.8%. We'll look at these updated numbers here, the markets in a moment, but it added 51.2 cents or 2.9% at $18.15 an ounce. Prices settled at their highest for a most active contract since April 2017, according to FactSet data. The action on Monday in gold provided fodder for both the bull and bear camps as a new 6-year high emboldened the bull camp at the same time, and the reversal from the high provided hope for the bear camp, analysts at Salivate Metals said in a daily note. Unfortunately for the bull camp, the markets must see consistent anxiety from noted losses in equities to continue the gold and silver rally straight away. And they said in Tuesday dealings, the U.S. benchmark stocks indexes traded broadly higher. In the near term, the lack of clarity in the trend in trade talks is likely to narrow ranges but leave two-sided trading in place, said the Salivate Metal analyst said. On Tuesday, however, the 10-year Treasury note yield was down negative 3.84 cents, which is down by 6.8 basis points at 1.481%, contributing to haven appeal on gold and silver. Last week, gold also closed at more than 6-year highs, boosted by safe haven bids as the U.S.-China international trade battle escalated. Gold pulled back modestly on Monday as both Washington and Beijing struck a more conciliatory tone, though analysts remained wary of the potential for further deterioration and expressed concern that elevated tariffs announced so far will add to the global economic weakness. Overall, if trade tensions remain elevated, gold can count on this being flat-out supportive, said Stephen Inez, a managing partner at Valor Markets. In a note, from my seat, it sure feels like the risk roller coaster has crested and may be setting up for the next drop soon. Technical analysts also pointed to more near-term gains for the yellow metal. Gold is breaking out of its recent range and has room to run, wrote Samir Samana, global market strategist at Wells Fargo Investment Institute, in a note. Resistance should come in the next at psychologically important round numbers at $1,600 and $1,700, and the February high of $1,615. Support will likely be found at the 50-day moving average, $1,435, followed by the 200-day moving average, $1,321, and the recent low, $1,269, Samana said. This is in the chart here. Meanwhile, silver has outpaced gold's gains in August, posting nearly 11% rise so far this month versus an almost 8% rise for the yellow metal. Should also be noted that silver is beginning to get a curious A chorus of bullish analyst forecasts suggesting the metal will begin to outperform gold, said analyst at Zaner Metals. This is happening actually sooner than I thought it would, for sure. In other metals trades, September palladium rose 0.4% to $1,478.30 an ounce, while October platinum up 1.21%, gained 1.2% to settle at $868.20 an ounce. Even copper's going up just a little bit as well. You know, it is interesting to see. Here's the markets right now where they stand according to Kitco. Look at these metal prices up. Gold is up a solid 1%, 1.04% for gold, up $15 at $15.43.50 an ounce. Silver is up 52 cents. It's almost 3% growth. That's pretty good. That's unexpected in my view, but that narrows that ratio between gold and silver, which we'll explore here in just a moment. Platinum is up $10 at 1.1% growth, $8.69. I've always thought platinum was probably the most undervalued of the metals here, and we're starting to see a little bit of breakout there, a little bit of movement. Palladium is up with the smallest climb at $1,487. It's going to be interesting to see how that plays out. But look at rhodium. Rhodium is up. It's solidly over $4,000 an ounce, but it's really difficult to analyze why it's going up. Although it does trend when the other metals go up, it's going to probably go up as well. Now, there you have it. Very interesting indeed. Let's take a look at this gold and silver ratio and explore where it is now. As of right now, it is at 84.7. In other words, it takes 84 ounces of silver, 84.7 ounces of silver to buy 1 ounce of gold to exchange if you're going to do a trade based off the spot price. Which most likely, that's never the case. That just gives you an indication of what it is via spot price. But in practice, you really never get that because, more than likely, whatever bullion dealer you trade it to, they're going to take a cut of that, and you're not going to really be able to preserve that ratio there. It's going to probably do you probably more harm. You end up losing out making that trade. But nonetheless, you can see that it is narrowing some, well below 90, which is good. Here we can see the 10-year historic gold-to-silver ratio, and it has been climbing up pretty steadily here, especially since 2016. We've seen it steadily climbing up, but you know what? It was a time. Well, let's see here. This is 92 was where it was in July, and now it's climbing. It's coming back and showing a little bit of normalcy here. So it's very interesting to see that ratio start to narrow and squeeze down. I believe that we can be happy if we see it running around the 60s, the high 60s or early 70s. I think it would be nice to see it go back into that level again. We can see here in 2011 when we saw that big, huge spike in prices, it got down to 32, about 33 to 1. I don't think we'll see that for quite some time. These climbing prices now are happening because of concerns over the economy, talk of recession, whether realized or not, or legitimate or not. Psychology plays a huge role in this type of thing. But there it is. It's fascinating to see these metal prices rise. For me, I'm bummed out because I'm in buy mode, and this is going to make it even much more difficult to purchase, unfortunately, in this particular environment. But nonetheless, we press on. I'm going to continue to buy, and I believe and I tell you what, I take the part-time prepper's viewpoint on silver. Anything below $20 for silver, I think, is a pretty good bargain. I say that cautiously because of how much silver there is out there and how much it's used as a commodity. But I think the action we're seeing in silver now, I believe, is because of it as a hedge, not necessarily a commodity. I think the biggest example of that is copper. Somebody else had mentioned in a video, I forget who, may have been Losing Louie, who talked about copper and, or no, maybe it was Silver Bean Counter, who mentioned it, that copper's movement is really stagnant. Look at here. Just today, 0.2% higher and 0.22%, whereas silver has moved up well over 2%. So when you have that kind of movement, that's not because it's a commodity. That's because it's money. And people see that as a hedge against economic instability. That should encourage us, those of us who acquire or have silver and accumulate it. That should be a huge encouragement to us that silver is making its comeback. It's the beginning of the comeback for silver. But we'll see. Tomorrow is a different day. And as the article says, we could see, these metals are kind of breaking up, but everything could calm down. I think once people realize that this trade talks are going to be volatile, they're going to get used to the volatility. The volatility will, in a sense, become normalcy, at least until election day, it seems, before there's any big breakout, unless somebody gives, and in one way or the other. And I don't really see Donald Trump giving in this. I think really the United States has the upper hand, as whether China will give or not. So we'll find out. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.